All right, ladies and gentlemen, it is the Valuation Masterclass Boot Camp live presentation of the valuations of Ferrari and Tesla. Tonight, we're going to be showcasing the students, some of our best students, as well as the supporting teams that have helped those students get to where they are. In this Valuation Masterclass Boot Camp, we've had a lot of students from around the world who have been participating, learning how to value companies. And I just want to introduce the first person who's going to present. And this is Archie Brooks. And Archie is supported by his teammates. And Archie's going to present on Tesla. How does this go? Well, Archie's going to get about 15 minutes of time to present, and then we'll move into Q&A. The Q&A will be about 15 minutes, and then we're going to move on to Farouk. Our second presentation today is going to be Farouk Quadri, who's going to be presenting about Ferrari. These guys are prepared. They've done a lot of work. They've got supporting teams that have encouraged them on. And I want to welcome all the viewers and listeners that are here, including all of our Valuation Masterclass Bootcamp students who are here to ask questions and get involved. In addition, if you have any question about these companies and the valuations, make sure to post them into the comment section, however you're viewing this. I think we now are pretty much ready to roll. And so without further ado, I'm going to bring on Archie. And Archie, how are you?
Yeah, I'm just so excited and so thrilled now.
Yeah, it's great. And I think now the most important thing, you've worked so hard over the last 5 weeks now, it's time to relax and, walk us through the work that you've done on Tesla. I
Great.
think you've got some interesting ideas. And so I'm going to give you a warning when you got about 5 minutes left.
Yeah.
Okay. So we'll
Okay.
do about 15 minutes, but it could be shorter, could be a little bit longer. It's not a super hard stop, but just keep the flow. All right. So let me get your screen up here. And now we can see your screen. And so what I'm going to do is I'm going to ask you to kick it off and get started. And then I'm going to remove myself from the screen so they only see you and your PowerPoint.
Okay.
So go ahead and start as soon as you're ready.
Is ready?
Yep.
Okay. So, ladies and gentlemen, my name is Archie. So I'm really honored to have you here. So I'll be talking about Tesla. Tesla electric vehicles are losing their mood. I initiate coverage on Tesla with a sell recommendation based on a target price of 125 US dollar, implying a downside of 37%. I derived the target price from a DCF-based valuation using weighted average cost capital 10.5% and terminal roll rate of 4%. My highlight story: Tesla triggered an extensive price war to gain a market share. The energy segment businesses outpaced the EVs in years coming. The new raw overseas factory to scale up production capacity several suppliers for lithium battery and unexpected supply chain disruption. So I will come to the Tesla background. Tesla is an American electric vehicle and clean energy company. It operates in two reportable segments, which are automotive and energy, with the former bringing the main sources of revenue. And currently, Tesla developed for consumer vehicle, the Model Y, Model X, and S, with Model Y being the best-selling battery EV model globally in Q3 2023. And Tesla continued to shape the EV US market, holding 60% of EV sales in the first 7 months last year. We come to my headline story. Energy businesses set out to gain control. So the first story is that Tesla triggered an intensive price war to gain a market share. Tesla's position has been challenged by a Chinese EV giant, BYD. In fact, in Q4 2023, BYD surpassed Tesla by selling 526K units of factory EV compared to Tesla just only 484K to become a new number one in EV in global market. And in order to gain a market share during Q4 2023, Tesla triggered a price war in many important markets like China and Europe, and consequently, the company profit sank 44%, given a revenue growth of 26% in Q4 2022, 23, I'm sorry. And I believe that this is a step back because price lag hurt the margin and damage the brand, which could potentially prevent Tesla premium pricing in the future. And therefore, I expect the price cut will persist in 2022 to pave way for many new affordable next generation vehicle in the future. And we come to my second point is that energy segment businesses outpace the EV in years coming. By 2030, the global demand for energy storage and generation (EGS) factory will reach 1,000 gigawatts. And in 2022, Tesla EGS revenue increased 54% year over year, primarily due to the increasing deployment of Megapack and increasing 125% year over year to 15 gigawatts. And constant growth in deployment was further made possible by ongoing ramp of new Megapack factory in Labor, California, to a full capacity. And therefore, I expect a shift in revenue from automotive segment to energy businesses. We come to my last story. New room in overseas factories to scale up production capacity. Tesla has recently acquired land to be Megapack factory in Shanghai, and we have a capacity to, improve 10,000 battery pack a year, scheduled to start production in Q2 2024. Tesla currently has Megapack factory in California to supply the whole global market. So the new the new facility in Shanghai will be Tesla's second dedicated mega factory, and to expand to the big Chinese market and also lower the cost of battery can. And therefore, we expect a significant role in solar power and wind energy. So we come to the automotive industry analysis. The automotive industry is shifting from hardware to software, emphasizing on enhancing software functionality and services. China was by far the largest EV market with 55% of global EV sold, a total of 3.4 million units. Moreover, thanks to China's comprehensive supply chain advantages, the country is a competitive but a crucial market for automotive manufacturers. And additionally, according to Renview Research, EV charging infrastructure market will reach 1 to 1 billion by 2030, bolster the role of EV production itself. And we come to my last point is that factory are the new industry control point when the EV become a norm. China was the largest supplier of battery for the lithium battery using Tesla EV, meaning that the increasing geopolitical tension between the US and China could, and even in Europe, could potentially make it different for Tesla to buy the batteries. And automotive manufacturer need to diversify the input and production plans, put like or just put manufacturing in area that is sold custom the profit or the the product to customer in order to avoid the supply chain disruption. So we take a look at the P&L in the third quarter of 2023. Tesla experienced a decrease in gross profit at 22%, despite a revenue growth of around 9%. This can be attributed to the price cut Tesla triggered in the large markets like Europe and China during the same quarter. And the same pattern applied to EBIT with a decline of 52%. So I argue that Tesla is losing their competitive advantages and they have to employ the brutal pricing strategy to remain market share. And we come to the consensus estimate. Analysts hold a neutral perspective on Tesla with a slight skew toward the buy recommendation. However, the whole recommendation is still dominant. And the consensus forecast also predict the decrease of 30% in revenue growth for 2023. We come to the revenue structure. 82% of Tesla revenue come from EVs. The company also provides servicing facility with the energy segment accounting for 5% in 2022. Powerwall and Megapack assembly product, and moreover, solar energy system is expected an expansion opportunity. Tesla also had a supercharger network that mounted across the US, accounting for 7% of revenue. So now we come to AVMR. Tesla is ranked at neutral. Regarding the fundamental, Tesla stands now among the top 20% of 1,900 companies, and its asset turnover has increased significantly recently. And about the risk is the Tesla risk is categorized in the risky decile due to Tesla has a high beta. But however, the net debt to equity is negative, indicate that the company seeks at the large amount of cash. So we come to the world-class benchmark. So Tesla has maintained a strong growth and it ranked among top tier. However, in the past 12 months, the company growth has slowed down, bringing it down to just number 6. And Tesla revenue growth has increasingly over time and consistently remained at number 1 since 2020. In terms of expense direction, Tesla had recently experienced a dramatic fall in rank from number 1 in 2022 to almost the war number 9. And now we come to my P&L forecast. Yeah, I predict that by 2025, the revenue and the gross profit will improve due to, at that time, the company might have already ramped up the production for Cybertruck and all the energy product. And therefore, they also need to speculate on the inventory. So we can see that the increase in inventory from 2022
5
to
minutes left.
okay. So about the effective interest rate, um, Tesla Tesla recently had issued an alternative asset-backed note that with a maturity of 7%, and they also increased the contractual interest rate from around 4% to 6%. So I forecast that the effective interest rate will remain around 6% in the 3 forecasted year. And now we come to the free cash flow data. So I use the free cash flow to firm. So we can see that in the first forecasting year, 2023, the free cash flow to firm that kind of decreased due to the high CapEx. And we come to the valuation, relative valuation. Tesla 2024 price to book value to ROE multiple is expected to be 2 and 3 times higher than that of the US and the Asian, excluding Japan. Based on that, we can see that Japan Tesla seems to be more expensive compared to its peers. And we come to the valuation, the target price. I assume that the risk-free rate of 3% and the market equity risk premium for the US market at around 6.5%. Tesla stock is volatile and notoriously had a high beta in the past 10 years due to servicing in cyclical sector. But I assume the beta of 1.3 because Tesla are developing an energy segment that could offset the volatility in the longer run. So I forecast a capital structure with 10.4 debt to total equity that increased from 0.7%. This is because the management team also aim to raise more capital to fund Tesla cost of developing and manufacturing current and future products. And about the sensitivity analysis, the bull case and the bear case assume revenue growth of 30, 38.5% and 31.5% respectively, with the former suggesting the value of 132 US dollar per share and the later 118 US dollar per share. So we come to my last part, that's the risk. Um, the risk is the first risk that delay in launching in premium production. Tesla business depends on how the company ramp up production and deliver the products on time. So therefore, any delays could harm the Tesla brand and also the company ability to fulfill the unearned revenue. Therefore, affected the operating result. And the 2 point, the second point is that the automotive market is highly competitive with a growing list of established and new players. So the last one is that high reliance on several suppliers for lithium battery cell. Tesla relies Tesla relies on suppliers such as Panasonic or CATL for battery cell and have limited flexibility in changing supplier. Any disruption in supplying of battery cell from Tesla supplier could limit the production of their vehicles and energy storage products. Moreover, the price of the material fluctuates, and their available supply may be unstable. So that's the end of my presentation. Right.
Excellent. Okay, just leave it up there for a bit, and we've got a few questions that we're going to start off with from Moman. Moman asks, what do you think would be the main catalyst that would bring the stock price down to your target price? You've got a 37% downside.
Mhm. Yeah, I think the main catalyst that bring the price, I think there will be the price cut. The price cut that I predict that the price cut might continue, it may consist in 2024, and it dramatically hurt the margin in the brand. And yeah, this is my answer.
And one of my questions is about the energy sector. Right now, it's a very small amount. What is your expectation of where that will be? I don't know, 3 to 5 years out.
Hmm. Yeah, I think that Tesla M, Tesla ROM, they 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 developing many facility in Shanghai, and they just um to in order to ramp up the production, and because the energy segment is also the promising segment, so I think that it will increase in the future.
But I mean, is it going to be significant, or is it still going to be relatively small relative to the overall revenue of Tesla?
Uh-huh. Yeah, I mean, compared to last year, the revenue of energy segment increased 54%. So this is really increasing and impressive. And they Tesla also aim at increasing their production and facility in Shanghai and in Europe. So, but by 2030, we are also seeing increasing demand for the product for energy because the the renewable energy, and the segment also benefit from many po- policy many policy that support the role of renewable energy.
Okay. And Moman also asked, you said there'll be a shift in the energy segment should take control. So why do you think that the company won't have the same strong moat it had with the EVs?
Yeah, this is because the price of the price of the products of Tesla, that's it, that the Powerwall and the Mega Pack is more competitive than the other player in the industry. because they have the more advanced technology in it.
Okay. One second. So, how does it feel to graduate from the Valuation Masterclass Bootcamp?
Yeah, yeah, I'm feel really, just I'll just share something that I was the EOR in the last boot camp, but at that time in the very first week, and at that time I just tell myself I really I followed the boot camp because I have the whole horrendous time management, but I just screw up my courage and I took another boot camp here. But I couldn't believe that I could stand here and present my report. So I'm really proud of myself, and yeah, I'm really thankful and grateful for what I learned here. My feedback, many feedback from moment,
Yeah.
and yeah.
I remember our first conversation, when we first talked, and then when you dropped out of the first boot camp, I
Hmm.
was worried that you weren't going to be able to come back. Then you came back, and I was worried that you may drop again, but you survived and you thrived. So, congratulations. Next question is, how would you describe the transformation that you went through? I mean, like you say, it's pretty amazing that you've just done a complete report on Tesla.
Hmm. Now, the transformation, I think that became really challenging, and it not only challenged my time management, it also challenged our commitment to the industry because the finance industry is really competitive, and I learned a lot from the bootcamp, and also technique and yeah.
Okay. And last question is, how did you find out about the boot camp and why did you decide to join?
Okay, so can you ask again?
How did you find out about the boot camp? And then once you found out about it, why did you decide to join?
Yeah, at that time, I had some interest in the research challenge from CFA Institute, and I saw a reel on YouTube, and I go to his LinkedIn, and it's just I saw the valuation master class. I'm really excited at first, and I just joined it, and I fell for it, but you know, I because at first when I joined the boot camp, I take it for granted, but later I take it more seriously, and I'm here.
Yeah, it's awesome. And we have a few comments before we wrap up with you and move on to the next. We've got some thumbs up from our listeners and our viewers. We've also got someone saying amazing work, and you've got a rocket sign there. And we've got excellent work, Archie. Proud of you. And also great work, buddy. So well done. Congratulations. Now you can take a rest and cheer on our next presentation. So let's do it. Thank you. And I'm going to take you off the screen now, and then we'll see you on Friday for graduation. All right, ladies and gentlemen, wasn't that interesting? I mean, a downside of 37% for Tesla, that's pretty challenging. I mean, it's hard to bet against Elon Musk, and yet that's what Archie did. And I do want to mention about what I saw in Archie. Archie attended the boot camp previously, and he ended up quitting and dropped out. And I was worried, but when he came back, I was happy to see that. And truthfully, he's done a great job at committing himself to the boot camp. Well, the next person up, I want to just again introduce. His name is Farouk Quadri, and he's going to be presenting with the support of his team. He's going to be presenting Ferrari. Ferrari is such an interesting company, so it's going to be exciting to see what he has to say. So first, I'm going to bring him on. Farouk, how are you? Are you ready to go?
I'm very ready to go, sir. I'm ready to go.
I'm excited. So I'm gonna just kick this off by bringing up your screen. Hold on one second. And now I've got your screen up here, and I've got you. You've got about 15 minutes to present Ferrari. I love to hear your ideas on it, and then I'll have some questions, and the audience will have questions also. So, are you ready to go?
Very much ready.
Start. And by the way, you can press the the hide button down at the bottom, you can see it says hide. And yeah, you can press that, and then that way it doesn't show that screen. You see the hide? Nope. There you go. You see the down at the bottom says stop sharing. It says hide.
Okay, hide. Okay.
Yep. Click that hide. Okay, now go back and share your screen. All right, I'm going to take myself out of the screen, and then after that, I'm going to start the timer as soon as you start talking. So I'm going to go off now, and good luck. I'll give you a warning at 5 minutes.
All right. Good day, everyone. My name is Farouk Quadri. I'll be speaking on my finding on the company Ferrari MV. A slide is a slide is anticipated in the value of the stock, in the value of Ferrari stock. I initiate coverage on Ferrari MV with a sale recommendation based on target price of €193, implying a downside of 37%. I derive my target price from a DCF-based valuation using a cost of equity of 9% and a terminal growth rate of 4%. There are three major highlights from my valuation. There's a significant surge in capex to drive growth into 2023. Technological hurdles as the company ventures into production of EVs. Brand royalties that the company has been enjoying over the year seems to be slowing down due to increased market competition. A number of risks are militating that are likely to militate against my projections include the current global economic trends. It's a bit slowed down. Economically, globally is a bit slow down. I mean, it's a bit slowing down. The intense market competition in the automobile market in general and in the car racing sport market in particular. Regulatory compliance and technological changes that is facing the markets. Background of my friend, Ferrari MV is a young sport car manufacturer founded in 1939, with its first car produced in 1940. Ferrari became a public company in 1960. It specializes in designing, engineers, and manufactures of cars in Italy and sells them across overseas markets globally. The main source of its revenue is from sales of luxury sports cars, as well as brand licensing, merchandising, and sponsorship agreements provide a small part of revenue. The brand is highly associated with luxury heritage and has a rich history in motorsports, such as the Formula One World Championship since 1950. My story behind my valuation: a surge in capex and innovation to drive future growth, but not enough to drive the share price up. There's a significant surge in capex to drive growth. Ferrari's 60% raise in capex for 2023 demonstrate a huge commitment to infrastructure investment, aligning with the company's expansion strategies and diversification of its product mix. This financial injection is geared towards bolstering development of both current and future products, encompassing crucial engineering, designing, and development activities. This is to enhance existing cars, introduce new models, and broaden the overall product portfolio. With this strategic focus on investment and innovation, I anticipate the company's EBIT margin to grow from 20% to 28% in the next 3 years. Story two, to back up my valuation, the technology hurdles at the company ventures into production of electronic vehicles. Rapid advancement in automobile technology, including electric vehicles, are among the hurdles that may require significant R&D investment to remain competitive and meet evolving customer preference. The recent news of Ferrari's first fully electric vehicles in 2005, with a subsequent goal of making EVs comprise around 40% of its car production by 2030, should greatly stem this slide. The planned transition to EV is a substantial market opportunity for Ferrari to tap into the growing segment of eco-conscious consumers. This leads me to expect Ferrari to achieve a revenue growth of around 20% in the next 5 years. Third point, to back up my valuation, the company seems to presently experience brand loyalty appears slowing down due to increased market competition As a result of improved products and services from other high-end automakers such as Lamborghini and Porsche, Ferrari's brand loyalty seems to be facing intense market competition, especially in the sport car racing market, where it currently holds a leading position. However, in a significant move to stem this, Scuderia Ferrari, the company's racing division, recently signed Leo Hamilton, an iconic and successful Formula One driver, to join the Ferrari team in 2025 under a multi-year contract. This strategic collaboration should elevate Ferrari global visibility, attracting not only a surge in fan engagement, but should also enhance Ferrari's corporate image and brand reputation. As the report, as the sport car racing market is anticipated to achieve a 7.4% gap, reaching an estimated value of by 2030, anticipate Ferrari to at least retain its 24% share of the market in the next 5 years. Back to the exploration of this is the industry entirely, that is the entire industry analysis. Exploration of the fourth biggest industry automobile sector. It was one, as per IBI's World in 2024, the automobile industry is forecast to have a market size of 4.3 trillion US dollars with a modest growth rate of 0.8 for the year. As per Statista, the top five players are Toyota. This is showing that the market is getting to a level of saturation. As per IBS World, the market is driven factors such as building middle classes and rising incomes. Power struggle between power trading in the automobile industry. Currently, there are a total of 6 powertrains, the mechanism that drives the vehicle. If we face challenging mineral shortage, recycling challenges, and country policies, this is the area that Ferrari is currently venturing into. Significant supply challenges for lithium, nickel, cobalt, and cobalt sales targets. So these are some of the things that throw down. Now, it comes to the quarter presentation. Ferrari's quarter three revenue was up by 23% year on year due to rising sales volume it has experienced over the year. The operating profit and net profits also rose by 42% and 46% year on year respectively. Consensus estimates: about 64% of the analysts issue a hold recommendation on Ferrari, while about 36% are bullish. Tellingly, analysts expect a positive double-digit revenue growth in 2023, followed by a period of less aggressive increase in 2024 and 2025, respectively. The revenue breakdown, we're trying to show overall, Ferrari's main revenue driver in 2022 was the car and spare parts segment that accounts for over 5% of the total revenue. The sponsorship, commercial, and brand segment is the second largest revenue driver of the company, with about 10% of the total revenue. In total, in 2022 alone, revenue realized by Scuderia from sponsorship and commercial was around 479 million. That is 11% growth over 2021. Engines and other constitute other 5% of the company's revenue. About 45% of Ferrari's unit shipment 22 were from what? Were from Middle East, Asia, and Africa. Based on our fourth element, overall, Ferrari appears moderately unattractive relative to 60 non-financial companies in the Netherlands. Based on fundamentals, it ranked in the fifth decile in the Netherlands due to strong profitability driven by a high margin. Valuation, unattractive as it trades on high multiples relative to other companies in the Netherlands markets. Risk, the balance sheet risk is high as Ferrari current ratio is low and leverage is moderate. On profitable growth, consistently ranked in the top 10% among the 1960 large consumer discretionary companies globally since 2019. On profitability, consistently ranked in the top 10 for the majority of the period under consideration. In terms of asset efficiency, consistently ranked number 8, very low since 2019, contributing to a drag on companies' profitability. We equally talk about global benchmarking profitability. The ROA slightly rose from 50%, slightly rose to 50% from 13%. Growth in terms of EPS, earning per share, growth improved from negative to about 28% in the last 12 months. Regularization remains below average. Net margin, it remains at best and increased to 20%. Sales growth, it remains steady at number 3. Step up, net margin step up in the to the number to the first 30% in the past 12 months. On the profit segment, you can see the revenue keeps growing. It almost doubled in the next 5, so it's expected to be doubled in the next 5 years. The cash and short-term investments remain with rebounds. Not another. They keeps growing, but at a steady rate.
5 minutes left.
Overdraft and short-term loan of the companies are very seems to be very seriously, they are relatively modest. The long-term debt of the company is extremely low compared to the company's size of equity. Here is the cash flow that shows that our operating cash flows is within the expected bound. Then the current ratio shows that there is no risk of solvency as far as company is concerned. They show the revenue keeps growing in line with the asset of the company. Here, in terms of the forward price to book multiple, Ferrari exhibit a significant upside compared to the consumer discretionary sector in both Asia and Italy. I expect Ferrari to boost a remarkable return on equity of almost 30%, surpassing its counterpart in Italy, the world, and the Asia Japan sector average. This elevated return on equity is not enough to consider the company's cheap. Should help to revalue Ferrari to align with the 204 BP multiple of the global market. The company will theoretically warrant a 204 BP to the ratio of 1.8x. Consequently, based on this comparison, Ferrari appears substantially overvalued. I use a risk-free rate of 3.5% and market equity risk premium of 7.1% for the Italian market. Ferrari stock historically exhibit low beta, so I assign a beta of 0.8%. Employing a terminal growth rate of 4%, I opted for the free cash flow to equity method to evaluate Ferrari. This is a valuation of 193 euro per share using the free cash flow to equity methodology, indicating a substantial 36.7% downside compared to the current market price. If Ferrari achieves slightly higher growth rate of 10%, the real value will reach. Yeah, the sensitivity analysis. So any 1% increase, so it's likely to be around 188. I mean, the share price around 188. While below that is likely to run around 186 euro. Main risk likely to militate against my projections, global economic trend. Despite its exclusivity status, the current fluctuation in global economic conditions, such as economic slowdowns and exchange rate volatility in major countries, could impact consumer demand for luxury vehicles. The intense competition within the luxury automotive market, including competition from other high-end, such as Lamborghini, could pressure Ferrari market share, pricing, and profitability. Regulatory compliance with stringent regulatory requirements related to emission standards could increase operating costs and potentially affect product development timeliness and profitability. Rapid technology in automobile technology, including electric vehicles, automobile driving, and development to remain competitive and meet evolving customer preference. As a result of this, I thereby conclude, I thereby issue a slide. I hereby anticipate a slide a slide in the value of his stock. I made a sale recommendation based on target price of 193 as a hedge for likely loss in investment. Thank you for
All right,
listening.
well done. Just keep the screen up there because I'm going to ask you to go. The first thing, before we get into questions, you got a lot of questions here. So before we get into questions, can you go to the free cash flow section? Just because I wanted to look at your free cash flows. And I think you're going pretty fast once you got to that point. All right. Let's see. Slide 18. Yep, up one. There you go. Okay. Let me just get a picture of it. Okay, so the free cash flow to the firm was about 473. Then you're expecting it to go up pretty considerably. You have a relatively high amount of capex. Okay, that's helpful. All right, so we've definitely got some questions for you. But before we get to the questions, you do have some people cheering you on here. We've got some message from Nene that says great job, and we've also got Ashmita saying great work, and also Ashi is saying amazing work, and also we have Sutwin says well done. So you got a lot of support there, but you've also got a lot of questions. Are you ready to start on the questions?
How would you, sir?
Let's start. First question is from Eduardo. He says, Ferrari seems to be relatively well positioned to face the economy slowdown since main clients of the company come from a very specific segment. So I guess part of what he's asking is why be so negative? Maybe the company will do well if we have a slowdown.
Yes. Based on his exclusivity, the moat it has enjoyed over the years seems to be currently be threatened by a number of other firms that are stepping up the game. A company like Lamborghini and Porsche seems to increase the intense competition in that particular market itself, in the exclusivity market, as well as car racing, sports car racing market, where Ferrari largely operates, rather than the entire Lamborghini automotive industry.
And also, Eduardo had asked, fundamentals are very strong for Ferrari and EBITDA is growing strong. Why the bearish sentiment on the stock?
I don't get that.
So he said that it's very strong EBITDA, right? Why are you bearish?
Okay, I can hear you, sir.
He said that EBITDA is growing strong, right? Let's say EBIT is growing strong. So why be bearish?
Yeah, EBITDA is growing strong. Fine. The growth in EBITDA, I mean, the number of a number of the occurrences in the industry are not strong enough to push up the share price. So the share price seems to be already overvalued.
Okay, so it's a valuation measure. Okay,
Yeah.
let's continue on. Moment asks, what's the main thing that would bring the share price back to prior levels?
Yeah, for Ferrari to maintain its current level of share price, it needs to establish that brand loyalty. I mean, that brand loyalty needs to increase to find a way to ensure that the moat it currently enjoy is not being eroded. That is the moat it currently enjoy in the industry entirely. And then he needs to step up his game as far as the bidding war, as far as EV electric vehicles is planning intervention into is concerned, because that particular market, that particular section of the market is currently highly intensive, especially the battle between BYD and Tesla.
Okay. And one other question from Mutia says, do you expect that CapEx growth will hurt the net margin in the short run?
In the short run?
Yes.
No, I don't expect it to hurt hurt it in the short run, to net margin in the short run.
Okay. Let's look at some other ones. Hold on. So Momin was asking, I see that the stock price surged from almost the same level as your target price back in August to that high level today. That's why I'm asking about the catalyst that would bring the price down.
Yeah, I've spoken about the likely catalyst, I mean, the likely occurrences that are likely to drag down the price value, the intense competition in the market, the technological, I mean, the evolving technological fundamentals in the market itself. Those are some of the highlights that the company needs to take into cognizance if its current price is to be maintained or is to be brought down.
Okay. And
The
another
projected.
question from Superwan says, what is your key revenue growth contributor? I saw you expect the revenue to double by the end of 2027. What would be the one or two things that's driving that doubling?
It's sales of cars is what is likely to push that, as well as I mean, it's venturing into electric vehicles in 2025, going 2026 going forward. That is likely based on its status, exclusive, its high performance end of the market. It's likely to enjoy that boost in sales and revenue
Okay.
going forward.
So let me ask you, how does it feel to graduate from the Valuation Masterclass Bootcamp?
Personally, I'm happy that I'm able to stay throughout the 6 weeks attending an online lecture, because I don't think I've attended an online lecture like this because I've not really been keeping up to it. But I'm highly exhilarated to be able to step through and get transformed to the level I am now. Because earlier before now, I used to think there is no major difference between finance and economics because my background has been economics over the years. But when I ventured into the class, I've seen that wow, the gap between economics and finance, they are two different things. They are just two different things.
So you've clearly gone through a pretty big transformation in 6 weeks. How would you describe your transformation?
Well, transformation shows that I've learned some things, but I still have a lot to learn. And I can totally tell you I've been transformed. Maybe from on the scale of 1 to 10, maybe 6/10.
Mm. And last question is, how did you find out about the Valuation Masterclass Bootcamp and why did you decide to attend?
Okay, well, I got to know about valuation masterclass from a colleague of mine who we attend the same university together. I mean, a colleague of mine at the university right now, we're together at the same university. But he told me he saw the link sometime last year ago on our. So he was going to introduce me to it. In our discussion, I was able to learn that he knew something about valuation. But me, I used to think valuation is largely due to plugging of just plugging, not knowing that valuation is more or less about negotiation. How so? From that, I got into discussion with him. Was able to link me with Andrew and help me to do abracadabra and get me enrolled on the program. And why did I decide to be in actual sense? I want to change. I want a change in career trajectory. In all my life, I've worked in academics and research institution as an economist. But I think I want to go into corporate world. Let me see. So I want to strengthen myself before I go into corporate world. I venture into what's happening so that I'll be able to triple my earnings in record time.
Fantastic. All right. That's it. You're done. And congratulations. And now it's time to relax and cheer on the other classmates. And then I will see you on Friday night for the graduation ceremony.
Thank you, Andrew. Thank you, Mo.
Yep.
Thank you, my colleagues.
Yep. Well, wasn't that amazing? 2 great presentations. I just want to highlight one of our graduates. He was also what Farouk was talking about was one of our graduates named Abiodun, who was recommending him to attend. I also want to highlight Tiboho, who is a former graduate, who said, "Thanks for inviting us to listen to these informative presentations. It brought fond memories of participating in the boot camp." And those were the days. So we got a lot of great, kind comments. And also, I noticed that Benedette, who is also a former graduate of the Valuation Masterclass Bootcamp, said, well done, Dr. Stotts, for consistently raising knowledgeable financial professionals like you, Benedette. It's great to see you, and all of the great comments here. For those people that want to build a competitive advantage in company valuation, well, join the next valuation masterclass. I want to thank everybody for attending. Great questions, great comments, and most importantly, I want to cheer on all the young people out there, the students and others who want to build a career in finance, who want to advance themselves in the world of finance. Finance has been a fantastic place for me to learn and grow and continue to grow. So I welcome everybody to check out the Valuation Masterclass Bootcamp. Just go to valuationmasterclass.com and you can learn more about it. And for now, good night to everyone from Bangkok, Thailand.